Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. If you are new here, don't forget to hit that subscribe button and join the growing community of traders looking to sharpen their skills. Alright, in this video we are going to be diving into an advanced but super effective strategy known as the dual time frame momentum strategy. All right, we're going to be discussing the dual time frame momentum strategy. Now, this technique can help you time your trades with much more precision and increased overall quality of your setups. Okay, whether you are a beginner or a seasoned pro, this strategy is something that you will want to understand. Okay, so let us get right into it. The idea behind the dual time frame momentum strategy is to leverage two different time frames in your trading analysis. Okay, now one to identify the overall momentum and another to pinpoint the best entry and exit points. Okay, now this dual approach helps you avoid entering trades against the market trend and boost your chances of catching high probability setups. Okay, it's quite simple and it is powerful at the same time. Now you might be asking, why do I need to use two time frames? Can't I just focus on one time frame if I'm a scalper on the fifth? Can't I just focus on a 5 minutes time frame, plot my charts, follow the direction of the trend, put my trade in the direction of the trend and all of that. You might be wondering, what is the need? Okay, it all comes down to understanding the bigger picture and fine-tuning your entries. All right, so you probably had a saying, the trend is your friend. Well, when you only use one time frame, you might think you are catching a trend, but in reality, you could be entering too early or too late, right? So by using two time frames, you are getting both the macro and the micro perspective. Okay, so let us break it down. On the higher time frame, let's say the 1 hour chart. Let's go back to the 1 hour chart, right? Let's say you are identifying the larger momentum of the market on the 1 hour time frame. Now this tells you whether the market is bullish or bearish, right? Or if it is going sideways, if it is neutral, right? So in this situation, at this point, we had a bullish market, right, on the 1 hour time frame. But currently, we are having a neutral market. We are having a sideways condition on the 1 hour chart, as we can see here, right? So having identified this market condition on the higher time frame, then you can go to the lower time frame, let's say the 15 minutes, you can go to the 15 minutes chart, and then you're going to pinpoint the entry signal, right? When you go down to the 15 minutes chart, you can go down there to pinpoint your entry signal. This way, you are aligning your trades with the overall market direction, but you are not waiting forever to get in. All right, now let us start with the first step, identifying momentum on a higher time frame. Now, let's go back to the 1 hour again, right? You could actually use 1 hour chart or 4 hour chart or even the daily chart, depending on your trading style, right? What you're looking for here is the trend direction. Are we in an uptrend or a downtrend or a ranging market? That's the question you should be asking, right? In an uptrend, you will notice higher highs and higher lows. All right, in a downtrend, you will notice lower highs and lower lows. Okay, now the key is to identify the overall direction because you want to trade in the direction of the trend. If the market is bullish on the 1 hour chart, then you should be looking for buy signals on the smaller time frames. If the market is bearish on the 1 hour chart, you should be looking for sell signals on the smaller time frames. Now let us move to the second part of the strategy, the lower time frame. Right, let's go back to the 15 minutes chart. Okay, all right, now this is where you actually enter the trade. Let's say you've identified an uptrend, right? Let's say you've identified an uptrend on the 1 hour chart. You're now going to drop to the 15-minute chart to find your entry. Now, in this lower time frame, you want to wait for a pullback or a consolidation. For example, you can see at this point, when the price got to this, this dynamic resistance, we had a pullback, right? We had a pullback. Okay, so these are opportunities, right? At these pullbacks, these points of pullbacks, there are opportunities to buy at a better position, to buy at a better price, right? Now remember, the trend on the higher time frame is your guide, and the lower time frame helps you time your entry. Now you don't want to chase after price, so waiting for these pullbacks or consolidation phases allows you to get in at more favorable price points. Now here's where it gets even more interesting. You can actually combine this dual time frame strategy with technical indicators for even more precision, right? For example, let's use the RSI and moving averages. So I'm just going to add the RSI to the chart. I'm going to add the moving average to the chart as well. Let's just use the 50 EMA. All right, let's use the 50 EMA. Okay. Now, on the higher time frame, let's go back to the 1 hour chart. You could actually use the 50 period moving average to identify the overall trend direction, right? You can use the 50 EMA to identify overall, the general direction of the market. If the price is above the 50 EMA, the trend is up. If the price is below it, the trend is down, right? So on the lower time frame, going back to the 15-minute chart, the RSI can be used to confirm whether the market is overbought or oversold. All right. So, for example, let's say the 1 hour chart shows an uptrend and the price is above the 50 EMA. You can switch to the 15-minute chart and you notice RSI below the 30 level, for example. This could be a cue that the market is oversold and due for a bullish reversal. Now, this combination of both indicators on both time frames gives you the edge in timing your entry. All right. Now, to wrap things up, let's talk about how to put everything together in your trading routine. Now, the first step is to always check the higher time frame. Remember, it's very important. Check the higher time frame for the overall market direction. Once you've identified the trend, switch to the lower time frame, in this case, the 15-minute chart, and wait for a retracement or a consolidation. Okay, then you confirm with your choosing indicators and then pull the trigger when everything lines up. Remember, this strategy is all about alignment, right? The strategy is all about alignment. So if the momentum is strong on the higher time frame, the 1 hour chart in this case, and you are getting a solid setup on the lower time frame, the 15-minute chart in this case, then you will be in a much better position. Right? You're going to be in a much better position to catch the move. Okay? It's important to get your alignment always. All right? So that is the dual time frame momentum strategy in a nutshell. It's a strategy that can give you more clarity and confidence in your trades, whether you are swing trading or day trading. If you enjoyed this video, make sure to hit that like button and subscribe to the channel for more in-depth trading strategies like this one. Also, don't forget to turn on notifications so you never miss an update. Happy trading, and I will see you in the next video.